first-time home buyers need to check their expectations. Like, we show them a property and then it's like, oh yeah, but it doesn't have granite countertops,
Right.
or the floors are carpet and they're dirty. Like, you have no money, no leverage. You're 25 years old and you want to own a palace. You want to own the palace on Lakeshore Boulevard. All right. Hello. Welcome to episode 135 of KT Confidential, the real estate podcast.
Good morning.
I won't introduce ourselves because why? Here we go. Episode 135.
Why? It's just to save time.
First-time home buyers. That's what we're talking about today. Are they screwed? Are first-time home buyers screwed? Is the real estate market so hot, our prices so high, that as a first-time home buyer, you can't buy a home? You're screwed.
Well, and the source of this topic comes from our new videographer who himself is interested in real estate and learning about real estate, and probably concerned about the feasibility of buying real estate for first-time home buyers. So
I just want to clarify, because we haven't done an official announcement, which is a good point. We probably should, since we like him, at least so far.
Well,
only been with us for a month. He's still on probation. But Joseph behind the scenes is now editing our podcasts and going to work on some social stuff for us. And Ian has been promoted to lead videographer and is going to head up our media department. So new videographer, but new addition. There was no subtraction from the team. So we're just growing. So for those of you that listen and follow on a regular basis, that's a bit of clarification on that. But I don't know how old Joseph is, 21, 20, 22, something like that, I'm going to guess. Can't remember. But lives with parents still, wants to purchase a home.
Which in itself is a topic I wanted to talk about. So that's good that you bring that up.
Previously he was... It's tough in so many industries, and especially now with the change of more entrepreneurial minds, with how much easier it is to work for yourself or work independently and all this. So you get all these younger people now that didn't go to school to be a doctor, a lawyer. Unfortunately, there's less and less of that, but certainly less and less of the blue collar stuff, right? Like electricians, plumbers, like... It's tough in those industries. So you get, let me just finish and then I'll let you tap into that.
No, I will not allow that. If I want to talk, I will talk, because you interrupt me all the time.
Yeah, that's fine. That's what makes discussions interesting, and people like banter. If I was just talking. That's
what I'm saying. I will interrupt you if I have something of noteworthy.
Right. So anyways, he, is entering the industry that he wants to be in and a career he wants to be in. And I think we're giving him his real first shot at doing what he loves and getting paid for it. But it's tough, right? Like, he was doing all kinds of volunteer and kind of mentorship roles where he didn't get paid or not much. So how do you save money? He had a Shopify thing going where he made and lost some money and this and that. But you got to save money. Then you look at the price of homes, and the mortgage rules now changing again. So you got to qualify at a higher rate, and unaffordability. That's what it comes down to for a lot of first-time home buyers. And that's what a lot of the press is picking up on right now, right? Like, if you go on to, as you know, I subscribe to Apple News, and I subscribe to, in Apple News, all of the major newspapers, the magazines that I follow, Toronto Life, Cottage Life. Those are two of my favorites that always are reporting on the status of real estate in their markets. And all you see right now in social media and print media, whatever, how the real estate market is on fire. Nobody can afford it. The prices are unsustainable. It's time How are first-time home buyers ever supposed to buy a home? They're going to live at home forever. Yada, yada, yada. So What's the answer, Mr. Trott?
Well, I remember back in high school, I don't remember the guy's name, but we were pals in high school, hung out a little bit. And I remember one day he told me that he had saved $50,000 and probably towards the end of high school. So
and that was like over 20 years ago, or about 20 years ago.
He was hustling. He's working hard. He was going to school, and then he was working after school in the family business type of thing, and saving all his money. And he told me, "Yeah, I saved up $50,000. I'm going to go buy a Subaru WRX STI." And he was so proud. And at the time, I had no money sense. I didn't think twice of it. I probably thought it was cool. But, it's like, how do you get the message through to these people? And I think through social media and people like Gary Vee, people are doing a good job of it. So that information is out there and more readily available, because a lot of people grow up in families where they don't talk about finances. My parents never did, ever. A close friend of mine, he is Phil. He's really smart with finances and taxes and investing. And his stepdaughter, he's taught her a lot, and she's very smart and has been saving a lot of money, and she's doing well. But a lot of people don't have that, and I never did. So I kind of had to figure it out on my own.
But it's also a different time, because when we were growing up, the internet didn't exist. Our parents were brought up very differently than how our kids will look back at us as parents. I think a lot of faux pas 20, 30, 40 years ago, whether it's talking about sex or talking about your feelings or talking about money, I think those three things in particular have come a long way in terms of people not only being comfortable with talking about them, but having information available and resources readily available. I think the one huge fail in life in Canada is that schools do not have, you're teaching my kid my children are just going to go into school in September now. You've got Tessa, who's going to be going into grade 2.
Grade 2, yeah, September.
So they're going to be teaching them about polygons and, how many sides to whatever plex, and equations that they will absolutely never use, because quite frankly, I don't think our kids will even know how to multiply, because they're just going to use their calculators on their watch or on their phone or whatever.
Yeah. Even spelling,
even now, hey Siri, how much is 32 times 32?
Well, exactly.
And spelling, you got Grammarly just automatically fixing all your stuff or whatever. But so you're teaching kids a bunch of crap that they're never going to use. How about teach them about money?
I remember how to
make money, and then how to save money and how to invest money.
The only thing that I remember very clearly in school that was money related, it was probably in a home economics class, and the project was something along the lines of budgeting and coupon clipping. So we had a budget, and we had to plan our food or meals for the week. So we'd have to go through these flyers and pick what we wanted. That was the only thing. And for some reason, it just stands out as something I remember very clearly, right down to flipping through the flyers. It's a very,
I did that same exercise. Yeah.
But that was it. They taught us for a very short period of time how to budget, how to plan, but that was it. Nothing investing wise.
Right. But how to negotiate. Do you think that's a valuable life skill?
Well, can you imagine at that age, if you started investing or just saving, if they it would not have been hard to convey the value of somebody who saves a small portion of money weekly versus the same person who spends it, and where they would be when they were 30 years old.
I'm going to say this though. Like in my early 20s, I made a lot of money because I was successful in my career, and I spent it all. Right? I had nice cars, I had nice clothes, I went partying. If we were going to a club, we'd have bottle service and spend the night there. We'd go to fancy restaurants. You and I did many of those things together. The challenge people have in life is, even if you should be saving,
right?
You're living for today, or you don't care, and you don't really recognize, like, somebody hasn't come up with a plan that just works for you because you're so stubborn that, oh, I can't save everything. I still want to eat out, or I still want my Tim's in the morning. That's fine. You can do all that stuff that you absolutely aren't willing to give up. But where are the holes in your plan? And the answer is, you don't have a plan, right?
Well, can you think if that guy who was probably 16, 17 years old, saved, it was between 30 and 50. I don't remember. It was a lot of money. If at that time, I mean, houses, a nice size house, probably 200 grand could have got him something very nice. And that would have been more than enough down payment. And he could have rented it out. And now he'd be sitting on $1 million property, zero mortgage. But I think a lot of the problems too, and one thing I wouldn't say I struggled with it, I just wasn't aware of it. I never thought long term. I didn't know to, because you are, just like you're saying, you're living so in the moment that thinking forward to when you're 25, 30, 35, 40 years old, it just doesn't, you can't fathom it. Because I remember when my mom's 40th birthday, I was like, oh my God, you're so old. That's just, I thought at that point she was so old, and the whole theme was over the hill. And I'm like, here I am almost 40. And I'm like, damn, like I feel like I'm 20 still.
As soon as I turned 21, I booked a trip to go south with my girlfriend, who was 18, 19. She didn't have any money, so I paid for it.
Yeah.
We enjoyed that vacation very much. So 6 months later, because I got 2 weeks at that time, 2 weeks off per year. So 6 months later, guess who booked another vacation? And this time it was even nicer. So in that year, 20 years ago now, I probably spent $4,000 or $5,000 on vacations.
Right.
I liked it so much. The next year I did the same thing, and the following year the same thing. So every year spending
Did it keep getting better and better?
Of course. Well, I mean, certain trips you say, hey, we can go here for $600 for 4 days.
Yeah.
Like Natalie and I went to Jamaica once, and literally we went 2 days before the trip left because one of those super deals came up, and it was like $800 for the both of us to go.
That's a no-brainer.
Yeah. But to that point, if you have to go on vacation, and I'm not saying don't vacation, do you need the $5,000 vacation? Like,
right.
Go to the $800 place and you're still going to have a good time. The food might not be as great and the drink's not as premium. The sun's the same. You still get to swim. You're still going on the same plane. You're getting to the hotel in the same bus. So you got to look at those things. If I had saved money when I was 21, and by the age of 22, I was making a six-figure income. So you think back to that in your early 20s, even if you're making $40,000, $30,000 a year, the expenses are always relative to your income, right? People, as they make more, they spend more. It's natural. You're going to want a nicer home, a nicer car, nicer whatever, or now the things that you need become more readily available. So the more income you make, the more you spend. But there's always an opportunity to put a little bit of money aside. And there's never a bad time to put money aside. And sometimes it could be for a rainy day, because you look at what happened with COVID. I hope a lot of people learned that you've got to have liquid assets available in case shit hits the fan, right?
Yeah.
And it's going to happen again in your lifetime. So you need to be prepared. Hopefully not a pandemic, but I'm talking about, having to have liquid assets available. So I'll give you an example of myself, because we both were in our early 20s when we bought our first home. Now, yes, the price, and I think I said in the last podcast, I paid $199,900 for my home in Oakville. You can't buy anything in Ontario, I don't think, that's livable for $199,900 now. But it's all relative to...
Well, up in North Bay, Sudbury, Timmins. I don't know if you'd want to live there, but...
Well, would you want to own property there, though? Like, to get your foot in the door and rent it out and build equity and pay down your mortgage?
Well, that's the discussion that needs to be had.
Well, that's what we're going to talk a bit about too. But when I bought my house, okay, let's just say there are properties for $200,000 up there. I don't think there are. I don't know. I don't sell homes in friggin' Sudbury. Don't want to.
I'm sure there are. I've seen
them.
Are
there?
Yeah, there was an article about it recently.
Maybe we should look into it, because I think actually Sudbury would be and North Bay, good place to invest. And if you can buy something for $200,000, like, I don't know, I wouldn't be going out leasing, Ford Explorer for $600 a month or whatever. I'd be putting that money into a property and taking the friggin' bus if I had to. But when I bought my house, and the reason I bought my house, I was 23, 24 years old. I was in a serious relationship, still living, quote unquote, at home, and had to get out. And it was either rent or buy. Rent or buy. That's the only way you can move out, right? And I started looking at rental options, because I'm like, okay, that's easy. Only have to come up with first and last month. Didn't really have a whole lot of money. And then I started thinking, I'm like, hang on a second. The rent is, I can't remember what it was, like $1,200 or $1,300 a month. But by the end of the year, you're paying $15,000 in rent. Nobody just lives in a rental for 1 year. Very, very few people. You don't want to move again. You like the place. You like the area. Now, because you're paying that rent, you don't have enough money to save to buy something. So you're stuck there. A year, 2 years, 3 years, whatever. 3 years goes by. That's almost $50,000 that you've given to your landlord. Now, what about the opportunity cost? So if that money was then invested into property that you owned, and let's just say you lived there. You didn't rent it out, you lived there. The home is gaining appreciation every year. You're also paying down the mortgage. Those two numbers combined, plus what you paid out potentially in rent, you add those three numbers together, that's your opportunity cost on what the rental is actually costing you. So when I looked at those numbers, I said, no way, I'm not renting. I will stick it out another year at home. I'll be working as many hours as I can, so I'm not home as often, and that's going to help me make more money. And I am going to eat shit for the next 7 weeks or 7 months, 8 months, whatever it was, and put every single penny I can into an account that I'm not going to touch. And I did that. And it took something like 7 or 8 months. And then I had $16,000. So not a lot of money.
But that's enough to buy a house as a first-time home buyer.
So I went and now even the first-time home buyer programs with the government are better than they were then. there's a lot of incentives available for first-time buyers, even with banks. Banks want you, a little bit off topic, but since we say talking about incentives and banks want your business as a first-time home buyer more than any other customer, period. Why?
They'll have you for life.
Exactly. They're not only going to get your mortgage business, which they want. They don't make a lot of money now on mortgages because of the low rates, but you're going to have your savings and checking accounts with them. Now you're going to open up some RRSPs and mutual funds. Now you're going to have meetings with their financial advisors, and they're going to.
If you get a credit card with us, we'll waive your monthly fees.
Exactly. Now you're going to have the credit card and all of this. So they want your business very, very badly. Anyway, so I had $16,000. And I told the story in the last podcast, episode 134. You can go back and listen to that story. But I put the minimum down payment. I called the mortgage. I called my bank. I said, I need a mortgage. I just bought a house. I didn't even get an approval before I went and I bought it. I just bought it. I'm like, somebody will lend me the money, right?
Yeah.
I don't care what the rates were. And I think my rate ended up being like 6.5%. 6.5%. So people that are talking, oh my God, the rates are going to go up to 3%. Like, are you kidding me? My dad was telling me stories on the first house that him and my mom bought was something like 18%. Anyways, 6.5% mortgage. And I said, I'm putting the least amount of money out of my pocket into this purchase. So got the deal at 5% down payment. And at that time, the builder only asked for 5. It was something like $12,000 as a, it would have been about right. 3, 4, something like that as a deposit. So I had that money already. So basically, whatever my deposit was with the builder was going to cover my down payment, and then the land transfer tax, lawyers' fees. It came out to something, I can't remember the exact number, but about $13,000. I had $3,000 or $4,000 left over, and by my calculations, and the home was going to be completed in 6 or 7 months. Like they'd already broken ground or cleared the ground and ready to break ground or whatever, and it was ready pretty quickly. So in those next 6, 7 months before I got the keys, I continued to save. Now, when I closed on the property, I had $10,000 in savings. So I used some of that money to buy a new TV, buy some furniture, buy some paint. I painted, I put some backsplash, and it was a nice place. Sold it 5 years later, made some money, used that down payment or that equity to then buy the home that I'm currently living in. You did the same thing.
Okay, but now let's talk in today's time. Okay. How does that translate into people who think they can't get into the market? Because we're seeing all these articles now where,
all right,
this one in particular was saying, is the market is the bubble going to burst? First-time home buyers stand no chance.
Well, okay, go ahead.
Well, I was going to say somewhat in line with yours, but I think the big thing people need to realize is that owning a house as a primary residence shouldn't be like, that's the part of the American dream. But it shouldn't be. It should at that age, it should be perceived more as an investment into your future. And I saw an article not long ago about a guy who lived at home with his parents, and he owned, I think, somewhere between 5 and 10 rental properties. So he was living at home, and I hope he was paying rent at that age. I think you should be paying rent, especially if he owns 5 or 10, whatever rental properties. But instead of buying a house to live in, which becomes, it appreciates and you'll make money on it, but it becomes a big expense. There's a lot of costs associated with it, right down to, like you're saying, all of a sudden you want to furnish it and deck it out with all this stuff. So, your first house, buy out of the market, buy where you live, buy somewhere that's more affordable, something that's feasible for you, put the minimum down payment, and just start with that. Get your foot in the door. I think more people need to do that.
100%. I think the problem is we are so focused on first-time home buyers buying the home where they have to live. That is a huge problem. You want to know the real truth, the hardcore truth, though? First-time home buyers got to stop being so picky. They have got first-time home buyers need to check their expectations. Because when I work with first-time home buyers, and it's not too often now that I do, but our team as a whole works with a lot of first-time home buyers, and consistently, I see budgets being, raised. Like we show them a property, and then it's like, oh yeah, but it doesn't have granite countertops,
Right.
or the floors are carpet and they're dirty. Like, you have no money, no leverage. You're 25 years old, and you want to own.
But they're driving around in a
palace. You want to own the palace on Lakeshore Boulevard.
Right.
But when we show you a 1-bedroom condo and it's got carpet and laminate countertops, oh, I don't want this. I'd rather stay with mommy and daddy. Sorry, that's my one curse for the podcast.
I think it was so loud you actually blew the microphone. I couldn't even hear it. It's like it self-bleeped itself out.
Joseph won't have to bleep it out then.
Yeah.
No, but you know what? Like, that's the truth. That's the hardcore truth. Like, why are you being so picky? Just buy something. Just buy something. Like, not that complicated. Buy something.
Yeah. Well, I had
here's let me just finish, because now I'm getting heated. I'm getting heated a little bit. Let's just say you have to live in the GTA for work and whatever. You're absolutely dead set on buying your first home in the GTA. Do you have a spouse? Do you have friends? Maybe you become the landlord in the home that you're actually living in. Have you thought of that? So you rent a couple of rooms, call up your buddy, right? Hey, Sheila, you want to rent a room from my new house? Move out of your mom and dad's place? I'll only charge you $500. $500, I can move out of mom and dad's? Okay, sign me up.
Right.
So you rent 2 rooms. Now you're making $1,000 a month in rent. Or you buy a place where you can finish the basement, and now you rent out the basement. And then there's just so much appreciation over time. Like, if you're 25 years old, I guarantee you, if you can get into the market when you're 25 years old and you hold that property, not sell it, not flip it, not come up with unrealistic expectations, hold it for 10 years. You're going to be 35. 35, you're still young. You're probably just starting a family. Wouldn't it be handy to have $100,000+ cash as money in the bank, and buying let's say a $300,000 house? I guarantee you, a $300,000 home today, anywhere in the province of Ontario, will make you $100,000 clear money in 10 years.
You're being extremely conservative, I think, too.
I am. That's why I'm saying I guarantee it.
Yeah.
I wouldn't guarantee something.
If not, I'll buy it back from you for that amount.
Those real estate ads piss me off, by the way. What kind of bullshit
I know
is advertising is that? If we don't sell your home for whatever 99% of your asking price, we'll buy it. Yeah. Mm-hmm. Yeah. So in the contract with the little asterisks that says at a predetermined price to be agreed by both the agent and the seller. And by the way, that price just happens to be about 80% or 85% of the true market value of that home. Sure, anybody will buy it at that price.
I wonder if that ever happens. And if it does, it's only because somebody's in duress and they have to sell. So they're getting screwed. They got misled.
Yeah.
So I think the biggest thing is just to sum it up. First time home buyers, get over yourself. You don't need something flashy. Don't worry about buying something in the market you live in. You probably can't afford it. And if you have friends that are and you're jealous of them, there's a good chance don't compare yourself. Like you got to stop comparing yourself to other people because they may have had some help from mom and dad. A lot of people do nowadays.
Yeah.
So don't compare yourself.
100%.
Buy in a market that you can afford. Don't overthink it. Get your foot in the door. Stop spending money on shit.
As a parent, if your child comes to you and says, "Hey mom, hey dad, I'd really like to buy a home. I can't afford it. No obligation. You worked hard for your money. You don't have to give me any money. But is there any way that you could help me accomplish that dream, that goal?" And just, some parents are financially able to and want to. I have a couple of clients with multiple children that own investment properties, multiple properties, and the goal is to give those homes to the kids because they bought them. This is a great story, by the way, because I have two families that we manage multiple properties for, and one of them has 6 properties now. And here's what they do. From the first property, it gained equity. Then they refinanced it, pulled out their initial investment, and then put that into a second property.
Yeah.
Waited for the second property to gain in value. So this is over the course of the last 15 years or so that I know them. Maybe 12 years, whatever.
And that goes to the thing of people need to think long term. Second
property, they did the same thing. Third property, they did the same thing. So literally the 5 investment properties that they have, it's 4 investment properties that they have, paid themselves all of their initial capital that they put in to buy the first one. They've already recouped all of that. So literally those 4 homes have cost them nothing.
Yeah.
For those of you listening and those of you that aren't homeowners, there is a link in our Insta bio. And in that link, you'll find, it's our link tree. Go to our link tree. And there's a money savings tip guide. It's a free download. Adrian spent weeks putting it together. We spent hours upon hours coming up with ideas and tips on how to save money and where to cut costs. And I don't remember how many tips there are in there, but there's a lot.
I think there's 37. And the neat thing with it is it puts things into perspective, because I think a lot of people don't really pay attention to where their money's going.
Yeah. And here's another guarantee. I'm full of guarantees today. I guarantee you there's 2 or 3 of them that you'll review out of those 37 tips. And you'll be like, oh, that's a good point. Or, oh, that's a good idea. And take it seriously. Even if you own a home, like how many people, we're talking about first-time home buyers, fine. And this is what the podcast is about. By the way, if you are a first-time home buyer and you want to get hooked up with one of our realtors, send us a message. It's free. Buyers work with us for free. So we're going to have a consultation with you, let you know the process, what you're going to get. It's a whole bunch of added value to the buying process with our team. And you'll get one of our professional, experienced realtors that will hold your hand, walk you through the whole financial process, the buying part, hook you up with great lawyers and movers, anything you need. We'll get out, we'll show you some properties, show you what's available. We can get you into the market. If it's in an area that we don't work in, like Thunder Bay or North Bay or Sudbury, we do have contacts all across the country that we can hook you up with.
I think it's important too, because I think one of the challenges that maybe holds people back is the uncertainty of how to start the process, because it's intimidating. So all it requires is a phone call.
Yep. Or a DM message. You know where to find us. Whatever. Yeah. You're going back to like commercial days.
Yeah.
Just call today. Free information, no obligation. Call the KT team. So what the hell was I saying? Before I went down that path. I don't know. Oh, this is about first time home buyers, but the savings guide, even if you own a home and investment properties, please read it. Take it seriously. Now more than ever, our country has to do a better job of understanding our finances, being more careful on how our money is spent. I think the government is going to try and recoup a lot of the money that it's lost over the last couple of years. So taxation and
absolutely. And we're going to start hearing from all these people that collected on that.
Yeah. And I think a lot of people, a lot of employees are also going to be in for shocks when they don't get a pay raise or potentially pay decreases to keep companies alive. I think a lot of businesses are going to close. So we have to be very careful. If you're one of the lucky people that have a good job and you're stable and you've got savings and you own a home and all that, that's wonderful. But the problem, I think, once somebody owns a home, is mentally they think that they're kind of safe. You know what I mean? That I have my home is my investment. So, I don't have to worry about saving for a home or whatever. And now the $10 Starbucks stop in the morning isn't as hurtful to your bottom line because you already own a home. You have a nice car. Your kids are healthy. You have clothes. You have food. You got everything you need. And then we forget, right? We spend that $10 on Starbucks. Well, over the course of 5 years, you spent $6,000 at Starbucks, not 10.
Right.
And that 6,000 invested into property in 10 years is actually 30,000 or whatever, 12,000, right? Now, $10 at Starbucks, $10 at McDonald's, $100 on your cable, whatever. Savings guide will help you kind of understand that. So if you are a first time buyer, please read it. It's free. It's an easy download. We don't haunt you. We don't track you down.
Not only will it help you with cutting back in order to speed up the process of finding something to buy, it may also give you a bit of insight into some of the costs that are involved with owning a home and how establishing a budget and better spending habits now is really important, because when you do own a home, you're not going to be it's very likely that you won't have the same freedom to go and do things as you wish. So get used to those changes now.
Now, if you think first-time home buyers, so let's say before we wrap it up here, Adrian, if a first-time home buyer calls you today and they have an average income, but they also have somebody else buying the home with them that has an average income, so combined, because I think that's happening more and more. So whether it's partners, you're in a relationship together, or potentially a friend.
Well,
right?
I have a good example that we just helped somebody sell their house. There was 3 families that owned it together, and the 3 of them, that's all they could only way they could afford to buy a house. So they were new immigrants. They bought the house together, and then they sold it, and then 2 of them bought another one together, and then their plan there is to sell that eventually, and everyone have their own home.
That's a great story. I think more people should do that.
Yeah, for sure.
But let's say 2 people call you, right? They're first time home buyers. They qualify for some of the government programs. They've got a little bit in RSP. They got a little bit in savings. They spoke to a mortgage broker or whatever. Maybe they haven't. Let's say they have a budget. You can make up the budget. what's your biggest advice at that stage for a first-time home buyer before they even think too deeply into it? Like let's say they're taking our advice and they're DMing us, they're calling us this week, and what are you gonna chat with them about? What are you gonna do? What's your steps in that early going process?
I think one of the important things goes back to expectations of what to buy, and not to get caught up on the fancy features. And a lot of people watch HGTV shows and they want all that fancy stuff. I remember a client of ours, Marcin. He sold a condo with us and wanted to upgrade to a house. And the house that he's in now, when we first saw it, it was not pretty. It was rented. It smelled like cat piss. It was dirty. It had smelly, dirty, stained carpet.
I remember it. And it was on the market for a little while.
It was on the market for a little while, and I saw so much potential in that house. And it took me a while, after a few visits and a lot of convincing, and even his parents got involved and convinced him it was a good idea. And eventually he bought it, and he's done very, very well on that house. But it wasn't an easy sell. And I think, in hindsight, I'm sure he's very happy he made the decision, because a coat of paint and some new floors that him and his dad did themselves probably made them 50 grand just in that. So I think that's the big thing is being, trusting in your real estate agent to see past the cosmetic deficiencies and don't get caught up in buying the perfect place. And
that's great advice. A good realtor will be able to tell you, is this a wise investment?
Yeah.
And you got to be working with somebody that's 100% honest with you too, right? Like if you just happen to like the home, but it's in the worst neighborhood or in an area that's not going to appreciate at the same kind of rate, and they're just trying to put a deal together and finally get you to buy a house or whatever, that's not the same path. But there are opportunities. My discussion, we got to wrap this up, but and here's my advice to realtors out there. As a realtor, we with first-time home buyers, we got to get our listening ears on and ask a lot of why questions. Why are you moving? Why are you buying it together? Why do you want this type of house? Where do you work? What do you do in your spare time? Who's going to be coming over to the house? What do you see yourself doing in 5 years from now? Are you going to be making more money then? There's so many questions that go through this process. My investing tip for first-time home buyers, wherever you are buying a home, whether you are living in it or investing just to get into the market, try and find something that is reasonably accessible to transit. Because if it has transportation close to the front door, you're more likely to have good appreciation on the home, but also easier to rent. And just know your finances on the property going forward in years 2, 3, 4, 5, etc. So if you buy the cat piss house and it's 15 years old and it's going to need a roof in 2 years, 5 years, and you got to change the carpets because it smells like cat piss, and you got to change the appliances because appliances only last 12 to 15 years now. Just understand that math too, right? So here we are talking about the first time purchase. That's great, but you don't want to strap yourself so you're totally broke by doing.
And I think that's where many salespeople in all industries fails. They don't ask enough questions. They just talk and talk and talk, and they don't know anything about who they're selling to or what their needs and wants actually are. And God knows the first-time home buyer has no clue what they actually need, because the vast majority will be selling in 2, 3, 4 years because it no longer suits their lifestyle. Right?
I wonder, and I don't know if we'll get any comments on it. I don't know how many first-time home buyers are actually listening or watching. I hope lots, but I wonder how it must feel as a first-time home buyer, because we don't see the behind the scenes stuff, right? Like when you're laying in bed at night and scrolling through realtor.ca, because we know that's what happens. Um, I wonder how people feel now when they see homes at 599 that are selling for 810, right? And then you're like, oh, as a first time home buyer, I thought I could buy this at 599, but I actually can't.
I've had people that are, I mean, maybe they weren't the brightest people, I don't know, but they're an older couple that have owned many houses, and they kept sending me houses in a different market. Said, oh, this is perfect. I'd like to sell my house and buy this. And I had to explain to them, well, it's going to sell for $200,000 more. That's not a realistic price. So, so a lot of people don't, even experienced people get caught by that.
Yeah, well, whether you're a genius or not, it's tough to navigate what's happening in the real estate market. So, as a first-time home buyer, when you don't know what's happening and you can't figure it out, and you're just trying to start and whatever, it's got to be tough. It is tough. So that's not to pound chest or plug us anymore, but whether you're buying your first home or you need to move up because of circumstantial changes, just shoot us a message. We'll walk you through the process really easily. If we're a fit for you, and if you're a fit for us, because we don't take on all clients, we'll guide you in the right direction and make sure that you're getting the right advice. And that's the biggest thing, is get the right advice. So
if you don't,
with that,
a year down the road, you're still going to be searching for a house.
Exactly. And you'll be spending money on other stuff. And then you'll get stuck. This is what happens. People start saving for a first home, and a year goes by and they're like, crap, that's all I saved? I'll never be able to buy a house. Look at the prices. Let's just go on vacation. Right? Or their car breaks down all of a sudden and it's like, I won't fix it. I'll just get a new one.
Well, it's the same as anything. You start working out, a month later, you see no results or very little, and it's like, it's not worth it. You got to put in the time.
You're telling me it's not paying off? Anyways, episode 135, KT Confidential, the real estate podcast. Ariel, Kormendy, Adrian, Trott. Like, follow, subscribe, comment. We love you. Bye-bye.